Hello traders, in this video, I will show you how to take confirmation entries, mapping out high probability trades with price magnet confluence. If you are struggling with precision entries, then this is the right video for you. Please subscribe, like, and turn on the notification bell. Let's first understand market structure development, which will inform our directional bias and points of interest for an opportunity. We can see that there is a structure shift in this market by the break of this structure, point, and subsequently break of this structure. The market sentiment is to the upside. We then identify the origin of the leg which broke this structure, which forms our order block. Now we have a scenario-based opportunity. If the market retraces back to this order block, we zoom into the lower time frame and analyze structure shift. Points to note. As we map out the trade opportunity, look out for price magnets which will attract the market in your direction, such as fair value gaps and liquidity points. Now, as the price comes back to our point of interest, which is pretty much in order as anticipated in the lower time frame, there is a change of character here, which some traders will initiate a sell or buy limit. But typically, sometimes the price may retrace back and stops you out, maybe to clear out liquidity, or it can be attracted by an FVG that is below the OB. This is where confirmation confluence comes in handy. We wait for a 1, 2, 3 move, which is an inducement for early buyers or sellers, and liquidity to be formed above the order block for bullish market and below the order block for bearish market. Once the liquidity has been swept out, which we can see at this level here, we take the trade here with our stop loss below the order block and take profit at the liquidity points. Now, in a real market, AUD/USD, I took this trade, which ended up playing very well. As you can see, this market structure is to the upside. After a break of structure at this point, and here, we have a higher time frame OB here. The retracement leg in the lower time frame has formed a change of character here, but we wait for a 1, 2, 3 move, which we have right here. Now guys, with this BIOS, impatient traders will take a buy position here and a stop loss put probably here. This is what we call an inducement. The price retraces back and stops them out here. Secondly, as the price breaks this internal structure point, some traders will initiate a sell position here with their stop loss somewhere here. The market again stops them out and moves in the original higher time frame direction. As we map out this trade, we can also see here that there is a fair value gap in liquidity below the FVG. These act as magnets and confluence that may push the price higher. So this was a higher probability setup. Finally, traders, as promised, it is important to note that Forex trading is a game of probabilities. You should develop a back-tested and proven strategy to profit in the market. However good your strategy is, staying around in the market long enough is key. This can only be achieved with proper risk management and conservative lot sizing. Stick to your rules and predetermine your exit point and put a stop loss as you take the trade. I hope this video was helpful. Please subscribe, like, and turn on the notification bell for future videos. Good luck.